Hey, it's Paul, and thank you for joining me for this week's market update for August 24th, 2022. Today I'm going to really focus on discussions I've been having this week with clients and acquirers out there. As many of you know, POTOMAC focuses on the residential and commercial services market. We do between $1 and $2 billion in global transactions per year, and I guess over the last 20 years, no one has done more M&A and valuation work in the global pest control industry than POTOMAC. So I'm going to focus on some real-life examples that I'm dealing with on a day-to-day basis. And a lot of this comes down to the understanding of the cyclicality of markets. As I was thinking through an issue dealing with a client just the other day, I remembered a letter that was written by Howard Marks, who's the Chief Investment Officer of Oak Tree Capital Management, a large hedge fund that does value investing. And 15, 16 years ago, he laid out in one of his letters to investors, some of his key rules for making great value investments. And his first rule was understanding that most things in life are cyclical, right? There's ups, there's down. It goes like a sine wave, it's cyclical. His second rule was there's a tremendous amount to be made or lost based on people forgetting rule number one.
Rule number two. First, learn rule number one.
Basically, buying when things are low and selling when things are high. And after 13 or 14 years of ever increasing asset prices, our clients are basically out in the market saying, hey, the good times have rolled for a decade plus. In addition to asset prices being very high, we're also experiencing a tremendous amount of growth. Now, there's no one, I think, listening to this that would dispute the fact that residential services have been extremely hot during the COVID period. If I think back to 2017, that's when we really first started seeing a lot of private equity interest in the residential and commercial services space. It was really 2017 when I really saw a lot of participation from private equity firms in pest control transactions, which for decades were largely Orkin Terminix deals. And throughout COVID, as all of us were forced to suffer at home, we're buying pest control services. We're at home, our air conditioning's not working, so we're calling the HVAC guy. We've got plumbing issues, so we are at home and we're noticing these issues. And we've seen revenue balloon in those spaces. But now as the market has peaked, equity market has rolled over since November of 2021, we are in a global Fed tightening regime. It's not just the Federal Reserve, it's central banks across the world are raising interest rates. So the zero and negative interest rate environment that we've lived in for 13 years is now disappearing. I mean, if you look at the Michigan Consumer Sentiment Survey, you'll see that over the last 45 years, I haven't been able to find a lower consumer sentiment reading than what we're experiencing now here in the summer of 2022. And so consumers aren't particularly happy. And why is that? Well, let's just take a look. We've got inflation at a 40-year high, and it's becoming more and more sticky, right? We had Team Transitory in Washington and at the Federal Reserve telling us that inflation would come with the closing down of the economy and the fiscal and monetary stimulus, but once we get out of COVID, it would disappear. Well, that's clearly not happening. So that's put tremendous pressure, downward pressure on consumer sentiment. And we're also seeing year over year, real average annual earnings just plummet. The last 5 years, we saw relatively decent average annual earnings growth, but since COVID, you'll see that spike there in 2020. That's really when everyone sat at home, did nothing, and got paid. So, of course, their average annual earnings increased. But since 2021, things have really started to go the other way. Now, if you look at the red bars on this chart, you'll see in 2021, we saw a steep decline in average annual earnings. And, of course, the stimulus there propped it up. The year-over-year decrease is the lowest in October and November of 2021, and that's effectively when the actual equity markets peaked. Since the markets peaked in November of 2021, month over month, we've seen a continuing decrease in real average earnings. So the consumer is getting weaker, and valuation multiples in the industry remain very, very elevated. Now, of course, we had a spike at the end of 2021, but Valuations are really still at an unsustainable high all across the residential services space. And so, in my day-to-day life, when I'm dealing with business owners owning pest control businesses, as I said last week, we had a dozen private equity firms down here. And as we sat down with private equity firms, I asked a lot of these guys, I said, look, you guys are paying basically all-time high transaction multiples for businesses that, albeit are relatively resilient in recessions. But there's no doubt in my mind that, given GDP is decreasing, given that we're in a Fed hiking regime and the consumer is getting weaker and weaker, 2023 is going to be worse than 2022, and of course worse than 2021. So why are you still willing to pay the transaction multiples that you are? And, overwhelmingly the response was, look, we've got to get a platform. We've got to pay to play. But if we're able to get a platform now and going into 2023, multiples continue to contract, we get a prolonged recession, it's going to have downward pressure on valuations. And then we'll be able to go out and average down our multiple by doing M&A, but we've got to have something now in order to make that work. The issue with that is when you look at the average business owner, everyone's looking through the rearview mirror of where we were. We still have significant demand. And a lot of the consumer sentiment and economic indicators that we're seeing are backward looking. But most business owners are focused on demand today. We're now entering a regime that's very different than we've seen historically. We've got sticky inflation as opposed to disinflation. We've got bond yields and interest rates going up as opposed to going down for 40 years. It's going to have a very negative impact on valuations. And we've seen multiples contract a little bit, but the next leg, I think, is really related to earnings. As we start to get into an earnings recession, that will further push down valuations. And so as I sit here today, I have a lot of discussions with our clients, and the clients say, hey, I'm growing at 10% a year. If I just push the goalpost out another year and continue to run this business, if valuation multiples remain constant, I'm going to increase my purchase price 10%. And I think that's a very, very dangerous proposition. And I don't really have to predict the future to think through this, right? This is not about predicting the future. This is looking from a historical perspective. We've had a lot of tailwinds. Going into 2023, we have a lot of headwinds. My main message to you today is, I've said multiple times over the last year or so that private equity tends to come late to the party, and they usually don't stick around long. So I think right now, effectively today, August 2022, we are at peak private equity interest in the residential services space. I think it's going to be fleeting. And when I talk to clients, of course, they're all flattered and excited that private equity is interested in them. And they say, hey, I can grow this business another 10, 15% and take this business out to market a year from now. I think that's, again, a very, very dangerous proposition, given not only our interest rates going up and valuations rolling over, but also the general consumer is becoming weaker. And if cancellation rates increase, if there's pricing pressure on services, it's going to impact your earnings. And at the end of the day, financial sponsors, so private equity firms, are cash flow buyers. They're not looking at revenue multiples, they are looking at your cash flow. And so this will become very, very important in the future. And I think that you should learn from history that private equity tends to come late for the party. So don't rely on those that are here knocking on your door. Don't rely on the fact that they're here today and that they're going to be here tomorrow, because I believe that it's very likely that they will not. Understand the cyclicality of markets and where we are, and we're still at the peak. Thank you for joining us. Please like our YouTube channel. Please subscribe. Please like the video. And I'd love to hear your comments. So please put a comment on the video and we'll respond. Again, thanks for joining us today.